Well, hello, Maverick traders. Welcome. It's Joe with you again, February 5th. It's a Wednesday today, so let's get into the market roundup. You guys know how this works, so take responsibility for it. Let's get into some charting. Let's take a look at stuff technically, and I've got a few trades that we can talk about.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's move into our market analysis, folks. And you can see we had pretty much the same thing we've seen over the last few days. The gap down and the retracement. So straight into the daily news, another gap lower. It finished in the green for the S&P and the Dow, but the NASDAQ was flat. The NASDAQ itself was up about 0.19. You'll see that the Qs were actually higher than that. We did have a miss with Alphabet, right? It's not Google anymore, but GOOG missed, and then AMD missed as well. So it kind of dragged it down a little bit, but overall, we had that same gap down move higher. Let's get to the chart here in a second. ADP employment number increased, and it was a big one, 183K versus the expected 150K. It was slightly higher than even the previous month at like 170. I think it was in the 70s. So the expectations were a drop in ADP employment, and actually kind of a little bit of a surprise to the upside. That was for January, but it does give the Fed a little bit more flexibility to sit back and just watch versus act. And I think maybe that had something to do with the recovery in the markets. Who knows right now. So how did we finish? Well, let's take a look at it. The Dow up 0.7%, the S&P up 0.39%. Understand, all three of these gap down and then moved higher. Now the Qs are up 0.45%, but folks, the NASDAQ itself was up 0.19. So I'm going to call it flat. That's why I called it flat. Russell's 1.11%, oil down 2.08%. We did have a build in U.S. inventories. Also, a little bit of worries on China being one of the larger consumers of energy. But with that build, I think in the U.S. oil, I think that kind of dropped it down just a little bit, down 2%. Gold pretty much flat, trying to figure out, like I am, what the heck is going on. So let's go to the advanced decline line. 71% advancing, 26% declining. It was a bullish day. It was another move to the upside, above below the 50-day moving averages. 60-40-ish, 58. It was 50-50. It's moving a little to the high side. So let's just jump straight into the chart. This might give us a little bit more of specifics, although this is the exact pattern that Corey, I know, has been talking about, and I've been talking about as well, thinking that, hey, we're going to get this bounce up after this reaction. It's been pretty flat volume-wise, so it's just let's gap down. We'll buy, gap down today, a move to the upside. So it's, hey, are we going up? Are we going down? And it looks like we're just, we're taking 2 steps back and then going 1 step, 2 steps back and going 1 step. So this pattern is still there. I still have to stay zero, folks. I want to get bullish here, but a lot of it has to do with some of the earnings going on and very specific to individual companies, not sectors. The economy's strength is the only thing that has kept my portfolio personally at a +1. I'm at a 0 to +1. Now, if this continues to subside and we get this retest, and I do agree, I do think that at some point we're going to get a little bit of a deep dig here, then we're just going to have to break above this resistance area, confirming the next bull flag pattern, right? But here's a bull flag pattern back in this area. I'm just going to keep drawing it here, folks, until you just get sick of it. But that's where I'm at. So I think earnings are still kind of driving these markets around, but I'm just going to play them the way that I can. Going over to the Qs. You'll see it's pretty much the same thing. Big move to the downside as well. That's moved a little bit higher. It's interesting that the Qs had a pretty good shot up regardless of what's gone on with Amazon, Tesla, and Google today. Were very, very weak. You could see that the volume was a little bit lighter. But overall, it's kind of got that same pattern, right? A little bit of a gap down. We're moving higher. It's not as clear-cut as a flag pattern as I have in the SPX. It's a little bit more steep, a little bit more aggressive. But then, once again, this is the Qs. So just be mindful and be patient is probably the only thing I want to say. I really didn't get much out of yesterday and today. I like to do these back-to-back sometimes, but I really didn't gain any sort of advantage. Let's get straight to the heat map, and you could see it wasn't just the announcers, right? We know that Alphabet here missed, and we know that AMD missed as well. But look at it, the drag on Amazon, who has earnings tomorrow, by the way, folks. And then Tesla, another drop on Tesla. In a lot of these, by the way, folks, over here is the AMD. The numbers on Google, the numbers on AMD is fine. Uber did miss as well. That's another one that came out. But when I see Amazon preemptively starting to drop or Tesla starting to move based on rumors or worries and stuff, I just have to go back to charting. And we are still in a specific area to where we have to let sentiment kind of fill itself out. Another earnings that actually came out was actually Disney. Disney came out and they actually beat their numbers. They did pretty good. However, they were a little bit worried about moving forward. But it was taken more of a glass half empty than half full. So there are some moves there, but they're not really doing anything chart-wise that I can jump on and be longer term in the sustainability. All right, after all that blah, blah, let's just get straight to it, folks. Here I was yesterday, and guess what? I'm here today. The only thing that I got today was another candle. Now, this candle did gap lower, right? So it opened completely at the midpoint of that other candle and went back up. Corey and I have been talking about a lot about, hey, we're going to revisit some of these resistance areas. If you guys are more of horizontal resistance, I mean, it's right there. It's within that pattern. I would not be surprised to get a doji. Now, could see a little bit of a resistance in another round of selling. That'd be completely fine. But I don't really want to look too far into it past that because I'm still not gaining an advantage from yesterday. However, I always will have trades for you. So here they are. Let's start with GILD. Obviously, AMGN came out and blew their numbers out of the water. If you guys seen that, it's in the same sector, right? Healthcare. It's looking pretty good. I don't know what's going to happen with it. Hood, a trade that I'm actually in. I've been in for a little bit. It's showing some more strength. And then Carvana is something that seems pretty interesting as it kind of base. The problem that I have, folks, is every single one of these has earnings in the next 2 weeks. I think GILD is the 12th. I think Hood is the 18th. I'm not sure on Carvana. Down at the bottom there, Conagra Foods, Adobe. Adobe is something that I'm surprised has not participated in some of this AI stuff, but it hasn't. It's a tech giant. It's been around for a long, long time, but it looks like it's showing a little bit of weakness. And then Moderna, when it comes to some of the healthcare stocks that are out there, this one seems to be lagging. And that's all I can go off of is just basically the charts. I'm not going to go too far past that. So let's just get straight into Hood. I like Hood. It's just got this nice pattern of it likes to base and then break out. And then it likes to... it looks like it created another base here. It looks like it's trying to break out. Now, unfortunately, folks, this does have earnings in the next few days. I'm not sure. I think I said the 18th. Double check it, please. It's well within the next couple of weeks. But I just like how it's moving. I like how it's favored. I like how sentiment uses it. So something between now and earnings, that's great. It's going to be tight. It's going to be short. However, after earnings, let's see what it can do because this could be something that could kind of lead the way. At least in its sector. We'll see where that goes. That's what I'm looking for. On the bear side, this is Conagra Brands, and it's just been kind of bleeding off for quite some time. So I just figured, hey, if it's going to continue to roll, let's let it roll. You can see this has had a pretty consistent time, or easy, I should say, breaking support level, support levels as it rolls lower. I like the separation here. Let me get rid of my lines there. The separation between the 2050, it just shows that it's kind of accelerating as far as price action goes. This is where I'm at. I'll probably place a trade on this tomorrow or the next day. The problem is it does have earnings on the 12th. So if I do place a trade on this, it's going to have to be a lot shorter term. And I don't know exactly how to play it because that's midweek next week, right? Or towards the end of the week. So overall, guys, this gap in recovery seems to be the normal. It's the normal day, gap up, gap down, recovery, gap down, recovery. So we need to focus on the week-to-week pattern. I love that. Be mindful of how volatility can impact your portfolio. Focus gap, recovery, gap, recovery. So let's stay mindful of where we are in the overall pattern and draw our patterns week to week more so than day to day. We do have jobless claims tomorrow. We do have unemployment numbers on Friday. Understand the ADP employment number was a pretty good surprise to the upside. I'm not sure how any of these are going to really impact things as the Fed can kind of just sit back and keep things strong. We'll see how this tariff back and forth plays itself out. Obviously, that's something going on. But then take a look at the bottom here, guys. We got Qualcomm, MicroStrategies, O'Reilly Auto Parts, and Aflac, Allstate. These are some of the big ones I wrote down just for fun. And then tomorrow, which already has been sliding a little bit, was Amazon. Eli Lilly, AstraZeneca, Philip Morris, Honeywell, ConocoPhillips, and good old Bristol Myers Squibb. So we'll see what happens tomorrow and the next day. Follow your rules. I found that kind of sitting tight with what I have has been working out. And if you do find opportunities, go ahead and throw a dart at it. But understand this isn't the time or the place to really just start building a portfolio, as I said yesterday. All right, folks, thanks for listening to me again. We'll talk to you next time. See you later.